Okay, next is strategic investment. We call it as a strategic investment if you invest in associate. Associate means you own you own you have ownership level of 20% up to 50%. Okay, this is it. So if you have the ownership at the level of 20% to 50%, then we call it as strategic investment or investment in associate. So you will have the level of the influence is significant, so that's why we call it a significant influence. And then type of investment is associate. Okay, so to call that, saying that you have a significant influence in a company, in another company, you have to meet these criteria. First, for the quantitative test, you have to have 20% to 50% of ownership. And then the other qualitative test is if you sit as a member of board of directors, okay, or you participate in policy making, and so on and so on. If you meet this criteria, then you have a significant influence in another company. So investment in associate means that you have significant influence over the company, but not enough to have control. So you can have an influence in that company, but you cannot control any decision in that company. And then under IFRS, investment in associate are accounted for using the equity method. Okay, you will apply equity method if you invest in associates. So let's go to the example. Maxi Corporation purchases 20% of Mini Corporation and exercise significant influence. Okay, so Maxi Corporation, let's say your corporation, your company, buys 20% of Mini Corporation. So 20% means investment in associate. Okay. January 2nd, 2019, your company purchased 48,000 shares at $10 per share. Okay, you want to buy 48,000 shares and the price is $10 per share, meaning that this number multiply with this number, $480,000. $480,000. Okay, so you will record investment in associate on debit side. Okay, your investment increase, and cash on credit side. Okay, for the year 2019, Mini Corporation, which is your investee, reports a net income of 200,000. Okay, Maxi Corporation's share is 20% or $40,000. So that company, your associate, that company get net income of 200,000. Okay, this 200,000 multiplied by 20%. 20% is the level of your ownership. Okay, so you will get, so you can claim 40,000 as an increasing of investment. Okay, so you will record investment in associate on debit side and investment income or loss on the credit side. Okay, this account, if you find this account in the debit side, in the credit side, means you get income. Okay, if it is on debit side, so you will get loss. Okay, so if that company, if the investee get net income, your investment will always getting higher and higher. At the end of the year, shares of Mini Corporation have a fair value of $12 per share. Okay, You don't need to you don't need to make any entry, you don't need to make any recording here because you implement equity method. Okay, next, January 28, 2020, Mini Corporation declared and paid a total cash dividend of 100,000. Okay, your investee pay a dividend as much as 100,000. So because you are also investor, so you will get cash, right? 20,000. Okay, 100,000 is the full dividend. Okay, so you will get 20% from this, so you will get 20,000 cash, 20,000, and investment in associate 20,000. So if you get a dividend from your investee, your investment will be deducted, will decrease. Okay, for the year to 2020, Mini Corporation reports a net loss of 50,000. Remember, a net loss will decrease your investment. Okay, and how much? 20% of this number. Okay, 20% of 50,000 is 10,000, and here decreasing in investment. Okay, and you get investment loss. Okay, the next, fair value on December is $11 per share. No impairment, no need to record anything because we implement equity method. Okay, this is okay, so let's say this is another example. Cost of 25% investment in investee co-shares. So you will have you invest in this company as much as 25%, so it is 8,000. You pay 8,500, sorry, 8,500,000, but the book value of the investment is 7,500. Okay, meaning that this is the excess of the share of book value. Okay, and then here is the fair value allocation to depreciable assets, which is 25% of total allocation to depreciable asset, 600,000. So this number minus this number, you got 400,000. 400,000 is assumed to be goodwill. Okay, and then this one is for 8-year life, so 75,000 is for a year. This is a amortization of depreciable asset. Okay, we continue. On January 1st, 2020, investor company purchases 250,000 of investee company's 1 million outstanding common shares for 8.5 million. Okay, so you will record cash on credit 8,500 and investment in associate on debit side for 8,500. Okay, remember you have 25% level of ownership, meaning this is investment in associate. Dividends of 1.4 million are declared and paid by investee on December 31st, 2020. Okay, 1.4 million is for 100% ownership, so you will only can claim 25% of this number. So 25% of 1.4 million is 350,000. So you will get cash for the dividend 350,000, and your investment is decreasing for 350,000. Okay, any dividends received are credited to the investment account. Okay, we continue. Investee company later reports net income of 2.8 million for its 2020 fiscal year, including a loss on discontinued operation of 400,000. Okay, so you will record so you will claim 25% from here and 25% from this. Okay, so 25% from 2.8 million, how much? 700. So investment in associate 700,000. Okay, 700,000, and then 25% from 400,000 is 100,000. You will record loss on discontinued operations. Okay, and then you will record investment income or loss 800,000. Okay, the extra cost of depreciable asset to investor has to be recognized on the associate's book. So you will record investment income 75,000, investment income or loss 75,000, and investment in associate 75,000. Okay, so the extra cost of depreciable asset will decrease your investment. Okay, so the total investment in investee corporation equals to acquisition cost plus the from the earning net income 700,000 less the 25 decrease of investors net asset from declaration payment of dividend. This is receiving dividend, and this is the amortization of capital assets 75,000. So your total investment in investee corporation is 8775000. Okay, on disposal of the investment, both investment account and investment income accounts are brought up to date. Okay, so if you dispose your investment, you will record investment account and investment income accounts. Okay, this is the summary